Critical illness policies are designed to provide a tax-free sum of money to assist an insured in adapting to changed circumstances caused by a life-threatening illness. Individuals that suffer a catastrophic health event such as life-threatening cancer, heart attack, or stroke may or may not eventually be able to return to work full-time, but they will most certainly incur expenses or changes in their lifestyle that are not going to be covered by conventional disability insurance. And so these individuals may require funds to permit them to make substantial lifestyle changes to accommodate the changes that were brought about by their medical condition. So let's take a look at some of the features of critical illness insurance. As I said, critical illness insurance provides a lump sum payment to individuals who suffer catastrophic health event, and key point here, they've suffered this health event, but they also must survive. And so examples of these health events, common ones are life-threatening cancer, heart attack, stroke, coronary bypass surgery, and the types of these illnesses that are covered vary by the plans offered by different insurance companies. So certain plans will cover certain types of illnesses. Now, the funds that are payable if you've had one of the covered illnesses and you have survived it for at least 30 days, then you will receive a lump sum payment, which frankly you can use to do anything you want to with those proceeds. And so, examples of what you can do is use the proceeds to accommodate a potential change in your lifestyle because of your current medical condition. So you may have a situation where you want to use the funds to pay off debts, or you may have incurred specialized medical expenses that were not covered under your provincial or your existing healthcare plans. You may want to look at alternative treatment that might not be available in provincial medical health plans or may not be approved in the country you're currently living in. You may be able to go to another country to get some alternative treatment for the condition that you have. Certainly you can use the funds for that. Some people, as a result of a change in their medical condition results in a significant change in their lifestyle. We have situations where people may now be bound to a wheelchair, and they may have to renovate their home to accommodate the fact that they're now in a wheelchair. Put up a ramp somewhere to get into the front door, widen their doorways, things of that sort. So again, these funds can be used for that. Take a vacation with their family, children, grandchildren, if they want to, in fact, just kind of lower the medical stress or the stress that they've gone through as a result of this illness. Some people may, in fact, recover from this, but have to change their employment given the impact of the illness on their health. Could be a stroke, could be some other type of a disease, may result in them having to change their employment, which could in fact change the income levels that they could earn in the future. So again, you can use the money to be retrained, things of that sort. So fundamentally, you can use it for any purpose. So critical illness insurance is something that has become more popular over the past 20 years or so in Canada. And we see it on mortgage insurance plans. We see it on riders you can add to other insurance programs. So we will spend most of this session looking at the features of critical illness insurance. So let's start with some basic features. You can buy this plan if you're between the age of 18 to age 65. Face amounts, how much can I buy? Range anywhere from $10,000 to up to $2 million. That seems to be the maximum currently in the marketplace. Typically, plans are anywhere from $50,000 to $500,000. Remember, this is if you have one of these covered illnesses and you survive for 30 days, there's going to be this lump sum payment made to you as the policy, as the life insured. So underwriting, obviously, when the plans are underwritten, your risk is assessed by the insurance company, and they're going to look at your age, the financial need, what's your current health and medical history, and also they're going to look at the medical history of your parents and your brothers and siblings and family, brothers and sisters. So all of these comprise the underwriting review for critical illness types of policies. There is something called the qualification period, and usually on a critical illness policy, there is no coverage provided during the first 30 days since the policy was issued. So you bought a new policy, you applied for it, it's been approved, it's been issued. If you get any of these covered illnesses within the first 30 days, you're not going to be covered. And so there's this qualification period of 30 days. Now, let's assume that you've gone beyond the qualification period of 30 days. After that point in time, if you in fact get one of these covered illnesses, you've been diagnosed medically that you've had a heart attack or you've had a stroke, and as a result of that event, you have in fact survived that event for 30 days. So you must survive the diagnosis for at least 30 days. And in that event, then you can put through a claim. So we have this 30-day exclusion period at the very beginning called the qualification period. And then we have basically a survival period or a waiting period, which says you must survive the event, the diagnosis of that event by at least 30 days. And then you will be eligible for this lump sum benefit. Now, some specific illnesses might in fact have longer waiting periods, longer than 30 days. Again, we'll have to look at the individual policy to see what illnesses are covered and what are the waiting periods for those covered illnesses. Plans for critical illness insurance, you can have term insurance similar to term insurance, so you can be covered for a 10-year period, 20-year period, or to age 65 or 75. And these plans also have that renewability and convertibility feature that you saw on term insurance, for example. And so same concept here. At the end of a term, you may be able to renew it, or if at any point in time with that feature of convertibility, you may be able to convert it into a permanent plan. So we have these term plans, we have permanent plans, and in some situations on some life insurance policies, certainly like mortgage insurance policies, you may be able to add critical illness insurance as a rider to those policies. So these are the basic features of a critical insurance plan. Now, there are lots of types of these policies in the marketplace today, and they will vary depending on the number of medical conditions that are covered under this plan. Now, the basic plan, we say cover we call them the big four, which are really the most prevalent situations where people, in fact, today will incur these types of illnesses and usually can survive given the advances in medical science these days. And so the big four tend to relate to heart attacks, stroke, life-threatening cancer. As you know, some cancers we can live with for years and years and years. Others are much more significant with respect to our longevity. And so again, in the policy, it would indicate which cancers may or may not be covered under that plan. And the fourth item that is common is coronary bypass surgery. So if you had to get a bypass surgery and obviously you survived it by a 30-day period, then you would be eligible for a critical illness benefit under this type of a policy. Now, you can understand policies offer more conditions. Some have 10 conditions, some have 20 conditions. I think your textbook will give you an example of the types of other conditions that are covered. And the basic rule simply is more conditions that are covered, the higher the premium is going to be. Some companies are now offering critical illness insurance policies for children. And so these types of policies are going to specialize in those types of illnesses more related or associated to children or minors, people under the age of 18, things like muscular dystrophy, type 1 diabetes, cerebral palsy, cystic fibrosis. So these kinds of illnesses that are more prevalent in children. So one can buy a critical illness policy for children to cover against these kinds of diseases. Are a lot of these sold today? I would say probably not. It's not sort of common, but my point here is that these are available from certain companies. Certain mortgage insurance plans, as I alluded to before, they will have critical illness insurance coverage so that they will cover you for death, disability, and critical illness. And obviously, again, critical illnesses, the definitions of what conditions are covered and the definitions of how you would qualify based on those medical illnesses will again vary by the insurance company. So, we have to read very carefully the terminology and the coverages and the limitations in a given policy to make sure we know what is covered and what's not covered. Now, we can also add riders to customize a critical insurance policy. And the most common ones are the return of premium, ROP. We would have discussed this concept under basic riders under disability insurance plans, but on critical insurance plans, we also can add the return of premium rider. And so the insurer will pay back some or all of the premiums if there were no claims, obviously, on death. So the person died, as long as the cause was not one of those critical illnesses that were covered. So if you died as a result of any other reason, then if you had this return of premium rider, some or all of a portion of the premiums for the critical insurance policy would be repaid. If you in fact surrendered your critical illness policy after 10 years and you never put in a claim under that policy, you may be able to get back some of the money under this rider. Or if the policy is matured or expired and no claims were made, then again, you would be able to receive a return of the premiums that you paid. So refund of premium or return of premium is a rider that's available under critical illness plans. You also have the waiver of premium on disability rider. And so premiums are going to be waived during a period of total disability of the premium payer. So the person that is paying for a critical illness insurance policy, if they become disabled, in other words, they didn't have one of the critical illnesses that were covered, but the payer of the policy becomes disabled, again with this rider, the premiums for the critical insurance policy are going to be waived during the payer's total disability. These tend to have a little longer waiting period. They tend to have a 4 to 6 month waiting period under this rider to qualify for benefits. So we can add return of premium or waiver of premium riders to critical illness insurance plans. Now, let's look at the benefits available. And so, as I mentioned before, you have this qualification period. So the diagnosis must occur more than 30 days after the issue date. So all that this simply says is I just got the policy issued. Guess what? In the first 30 days, doesn't matter, whatever happens to you in the first 30 days with respect to those covered illnesses, you're not going to qualify for a benefit. So there's no benefit payable if you got one of those covered illnesses in the first 30 days that the policy was issued. After that point in time, great. You must, if you had one of the covered illnesses, you must survive that for at least 30 days. So there's a 30-day waiting or survival period. And so if you survive the medical incident for 30 days, then you are going to be eligible for a claim under the critical illness plan. So you must make a claim within 30 days of the diagnosis. Medical proof is going to be required. They're going to want to find out from your doctor. They're going to verify that you have had, in fact, been diagnosed to have one of the covered illnesses, and you have now survived 30 days since that diagnosis. So medical proof is going to be required before they will pay out the benefit under the critical insurance plan. Benefits are lump sum, so it's not like disability insurance. Basic disability insurance will pay you a monthly income benefit. This is different. Critical illness insurance is like life insurance, death benefits. You are going to receive a lump sum, and that lump sum is not going to be taxable. Again, for the same reason, our life insurance death benefits aren't taxable. That's because we're paying the premium with after-tax dollars. So you get a tax-free lump sum benefit under critical insurance plans, and the standard exclusions apply to these plans just as they do to life insurance plans. So, if you got one of the covered illnesses as a result of war, acts of terrorism, attempted suicide, self-inflicted wounds, normal pregnancy, criminal activities, abuse of non-prescription drugs, or non-occupational AIDS or HIV. So these sort of standard exclusions will apply to critical illness insurance policies. So today, I would say that there's lots of room in the marketplace to add critical insurance coverage. Most people seem to have this type of coverage under their group insurance plans or under their mortgage coverage, or if they've got insurance covering loans, etc. Critical illness seems to be added in as a bundle of the coverages that are built into these group type of policies. On an individual basis, for individual critical illness insurance, there seems to be currently a fairly low penetration and sales in the individual marketplace. So, more and more people are surviving significant illnesses today. And so because of medical science and medical improvement, I think that this is going to be an expanding marketplace simply because, people will have these covered illnesses, and in fact, more and more, a higher and higher percent are in fact surviving. And so if you've had the critical illness, if you've survived the 30 days, then you'd be eligible for a benefit under the critical insurance policy. So that's the key features of critical illness insurance.